Now, in order to truly build out a portfolio that you're going to use to pay for things like bills, expenses, and other, you're going to need to invest into either different stocks or ETFs that all have a few things in common. These stocks or ETFs are going to have to be relatively high yield because with a higher starting yield, you're going to be able to earn a lot more income a lot sooner compared to other traditional investments. But along with this, you're also going to want to invest into different ETFs and stocks that at least historically have offered a positive total return, because even if you're earning a ton of income consistently, which in this video's case we're going to be using to pay our bills, for example, you don't want your underlying investment and your total return to decay over time as well. So in this video, I'm going to go through 5 specific ETFs that I would personally consider good candidates in order for an investor to use to pay their bills. Now, every single one of these ETFs are currently inside my long-term portfolio that currently earns me north of $7,500 per month in dividends, and I personally am going to be using different stocks and ETFs to pay my personal bills probably within the next few years. So if you want to see which 5 ETFs I think could be good candidates to pay for an investor's bills, then make sure to stick around, drop a like down below, and let's get right into the first ETF. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, like I sort of mentioned, if you are, of course, looking to build a portfolio to pay for things like bills, you're going to want to collect assets that are quality, which brings us to the first ETF, which I think is extremely quality, jepi, or the JP Morgan Nasdaq Equity Premium Income ETF. An ETF that I would consider a perfect candidate if an investor wanted to invest into something that's higher yielding and that has the potential to pay for things like bills. Now, this is because jepi, with giving you exposure to the Nasdaq 100, but with utilizing an option income overlay, this ETF offers somewhere around an 8 to 10 to 12% yield, depending on which time frame historically you're looking at. And for every single share of jepi that an investor buys into, they're going to receive anywhere from 30 cents to 40 cents to upwards of 50, 60 cents per month, which of course could be used for things like expenses, or instead just reinvest into more shares of jepi. Now, jepi historically has done well as far as price return goes, as well as paid out massive dividends, like I said, somewhere around an average of 10%. And also very important, again, for the context of this video, if you are going to invest into something to use to cover your bills, you're going to want the investment to offer a positive total return, which jepi over the last 2.5 or so years has offered investors on average around 14.5%, with those dividends being reinvested, or around 12% with them not. So even let's say in theory you take out half the dividends on a monthly basis to use for things like expenses, jepi would be a perfect candidate, historically at least, to use to cover your bills. Now, another investment, another ETF that I personally am actually building out a position in right now, but also would be a perfect ETF to use for things like covering your bills, would be Divo, the Amplify CWP Enhanced Dividend Income ETF. Now, Divo is an interesting ETF and invests into a basket of holdings around 28 different stocks as of right now, but then along with that, a actively managed portfolio manager identifies opportunities and risks and acts on those decisions in real time by doing things like selling covered calls on individual stocks, etc. Now, with this, you're going to see less volatility than that of the general market, generally speaking, but along with that, you're going to get a much higher distribution rate, which is around 5% as of right now, which again has much more potential to pay for things like bills, because 5% starting off is not bad at all. Now, for every single share of Divo that you own, you're going to receive anywhere from 14.5 to 15, 16 cents per share, which can definitely add up, but Divo has also been trading up and to the right over time historically. Now, in the max time frame over the last 7.9 or so years, Divo has returned investors around 12% on average every single year, with dividends being reinvested, or around 10.37% with them not. So even if you were to spend all those dividends on the way, you're still seeing a 10% increase plus every single year, which once again makes Divo a perfect candidate as far as an ETF used to pay for things like bills, in my opinion. Another ETF that I personally am buying into to in the future use for things like bills, expenses, and other things is SVOL, or the Simplified Volatility Premium ETF, which utilizes a portion of its portfolio to short the volatility index, but also, as you can see right here, invests in things like bond ETFs and all sorts of other different positions. Now, historically, SVOL has offered around a 15 or 16% yield, and it's paid investors anywhere from 30 cents to, as of recently, 28 cents for every single share of SVOL that you own. Now, 28 cents per share for an ETF that costs somewhere up around $21, $22 is a massive amount of income, making SVOL a potential candidate for a good ETF to be used to cover things like your bills in the future. But it's not just what SVOL offers. Also on the max time frame, you can see that over the last 3.5-ish years, SVOL has offered around 10% on average, with those dividends being reinvested, or around 8% with them not. Either way, once again, an ETF that historically has offered massive income and a positive total return, making it a potential candidate for this video's example. Another ETF that I have a sizable position in personally and that I'm going to use in the future to pay for things like bills, expenses, and other is jepi, the JP Morgan Equity Premium Income ETF. I'm sure a lot of you guys watching this video already know jepi. There's not really too much to go over when it comes to jepi. It utilizes the S&P 500, and then with implementing written on the money S&P 500 index call options, this ETF seeks to generate distributable monthly income, and it has historically. Now, jepi only offers around a 7, 8, 9% yield, so not the biggest amount of yield right from the start, but still not bad whatsoever. Anywhere from 30 to 40 cents on a monthly basis is what you're sort of going to expect from jepi. But the great thing about jepi is that historically speaking, this ETF not only has paid investors like myself and probably like a lot of you guys massive distributions relatively speaking, but also offered us a nice juicy positive total return, around 13% with those dividends being reinvested or around 11.3% with them not. Either way, once again, a good contender of an ETF that offers investors like myself and like you guys massive income from day one, relatively speaking at least compared to the rest of the market, and a positive green total return historically. Now, the last ETF that could be a good option to utilize as an income producer to help you pay your bills, or at least some bills in the future, is one of my new favorite positions, SPYT, or the Defiance S&P 500 Income Target ETF. Now, this ETF is relatively new, so we're going to have to see how this one plays out. There is, of course, risk with any ETF, especially when you don't really have that much of a track record to go off of. But this ETF offers a 20% distribution rate, and it's targeting an annual income amount of 20% in the S&P 500 using options paid out monthly. Now, for an ETF that costs around $19 or $20 per share, a 20% distribution or around 33 cents every single month is a massive amount of income and could potentially allow investors to earn enough income to cover their bills, maybe even sooner. And although the ETF has only been trading for around 0.69 years, so far so good, the ETF has offered an annualized gain of around 18-19%, with those distributions being reinvested or around 17.52% with them not. So of course it's way too early to know what SPYT, for example, is going to do long term, but I do own some shares and I've been adding some more shares to my portfolio on red days. So those are 5 different ETFs that could be potential good candidates to be used to pay for things like expenses and bills in the future. And although there's tons of other different stocks and ETFs that pay dividends, some higher and lower as far as yield goes, not every single dividend stock and or ETF is necessarily built or made to pay your bills, at least not as well compared to some others. But now lastly, most importantly, I want to hear from you guys down below in the context of utilizing income-focused ETFs in order to pay for things like your bills, expenses, etc. Comment down below your #1 favorite ETF if you could only pick one to use to do so. If you guys enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.